Joining me now to break down this economic news is Joe Minarik. He is the Senior Vice President and Director of Research at the Center for Economic Development here in Washington, D.C., and we appreciate you coming in.
Thanks for having me.
Let's talk about, first of all, what we are seeing as the main drivers of this economic growth. Where is it coming from?
Well, the strongest sector in terms of percentage growth in the economy was defense spending. That's a little bit offbeat. It's not going to continue. That was a 16% rate of growth in one quarter, and the money simply is not there for that to be sustained.
With the sequester.
Yes. But on the other hand, in this revision, we saw increases in two of the most important categories of spending. One of them is consumer spending. As you've heard, that's 2/3 of the economy. Consumers, to this point, have been a little bit reluctant to move ahead. That's important if we can get a change in sentiment. Second part is investment by businesses, particularly in equipment. And of course, if you buy a machine today, you're going to use it tomorrow, and that's going to produce more stuff. And that's what we need in this economy. So the changes in the numbers in this latest estimate are exactly what we would want looking forward.
Now, I know before there was this adjustment, you were already skeptical about some of the fundamentals underpinning the projections for the third quarter. You wrote in your blog that the numbers are a reflection of a, quote, data fluke or an unsustainable self-reversing glitch. And you addressed the U.S. defense spending there. So I want to ask you, for the long term, are the fundamentals of what we're seeing in this 5% growth in the third quarter sustainable?
That's the $64 trillion question in the long run. The tricky part about it all is, we look at the labor market, and what we need in this economy is people who have jobs and are willing to spend money. So far in this recovery, one of the things that has been a question mark and that has so far been disappointing is that a lot of the people who were simply scared out of the labor market by the difficulty of finding jobs have not found the opportunities there to get them to rejoin the labor market.
Yeah, they're giving up.
So the question really is this economy going to recover to its old level? Or are we going to be operating on a lower plane for the foreseeable future? That's the so-called new normal that people have been talking about. We have not yet seen the signs of the economy rebounding all the way back up to that old trajectory. And that, of course, is extremely disappointing to a lot of folks out there who are looking at much worse prospects than they thought they saw in their futures 7 or 8 years ago.
So if you're saying that so many thousands of people in the United States have given up looking for work, the long-term unemployed, if you will, that may never come back, who are the Americans that are going to feel this growth that we're talking about?
Well, so far, we do have, the folks who kept their jobs through this recovery. There is, to some extent, a divide in the population between those who have the skills to move forward in this economy and those who have fallen off. A lot of the kinds of situations that you hear about are people who had jobs in relatively basic manufacturing operations. And now we're looking at whatever they can find, fast food, positions that they don't see as being them. They thought that they had a better foothold in this economy, a chance to be a part of the solid middle class. And that's very discouraging to folks who have that kind of a prospect looking forward.
I want to get to the piece of the increase that came from business investment. We did see businesses to start to buy things like software, structures. We've done a lot of reporting over the last year and years about how corporations were keeping millions of dollars on the sidelines. Are we beginning to see them part with this money? And is this a trend you think will continue?
We really need to, we're going to have to see more data to be really confident. One of the issues in the structures side of business investment is all the vacancy in, for example, commercial space. A lot of businesses simply have been taken over by events, the changes in technology, reductions in retail, for example. In terms of equipment, businesses clearly have the opportunity to modernize their equipment. The question is whether they're investing enough to actually increase their total capacity to produce. Not just replacing an old machine with a newer, cheaper to run machine, but buying additional capacity so that you can actually produce more. We don't know if we're there yet.
Okay, let me quickly get to the fact that the Federal Reserve, the U.S. Central Bank, also watching these numbers. What do you think they're going to do with interest rates based on what we're seeing in the third quarter?
I suspect that they are pretty much steady with their plan, which is to say that at some point next year, they begin to allow interest rates to rise somewhat.
You don't think it's going to happen any quicker or slower based on these numbers?
I don't think that these numbers will change very much because of the fact that we have not seen a corresponding improvement in the labor market.
Okay.
That's, I think, where they see the constraint that they have to deal with.
Of course, we still have to see the fourth quarter numbers yet. Thanks so much, Joe Minarik, joining us here on set.